So you have that S-Corp set up. Now let's take full advantage of it through an accountable plan. I'm going to show you 5 ways to fully take advantage of an accountable plan, how to set it up, and how you can get bigger tax-free reimbursements from your business to your pocket. Okay, number 1 is the home office deduction. So now that we have an S-Corp, we can't just do things as we did them before. And that's actually a good thing because we could actually take more advantage of our business. So through that accountable plan, we're going to still take that home office deduction, but we're going to take more of a market rate approach to deducting your home office from the business. So let's say you have a 100 square foot home office. In the old days with the old Schedule C, you would just take percentage of use of your entire home. But with an accountable plan, we're going to actually take the market rate of an office and bill our business. So if I was to call 10 different leasing companies and say, hey, I need about 100 square foot office, what's the current charge if I was to lease that out in the public space? And I might get an average price of say $500 a month. What I'm then going to do is that I'm going to bill my business $500 a month through that accountable plan for my home office. So I'm going to write this down. It's very important through this accountable plan that we keep documentation, and we can even document those calls that we make to get a market rate for an office. So I'm going to go ahead and document these things, and I'm going to have my S-Corp pay me $500 personally for the use of that office space. And this is a tax deduction to my business and tax-free income to me. So rather than actually taking that percentage of use, my business is going to move $500 from my business bank account to my personal account. So when I do my taxes, I'm going to take $500 a month as an expense, and I don't have to claim that income on my personal taxes. All right, number 2 is the mileage deduction. So like I said, we can't do things as we used to do them. We can't just take 70 cents, which is the 2025 mileage deduction, and say I did 10,000 miles, 70 cents. It's not that easy. Through our accountable plan, we need our business to reimburse us personally for the use of our car. So we'll still do a mileage rate, we'll still follow our miles, but then we'll invoice or bill our business for our mileage use and our use of car, and our business would then pay us back. So we're not going to do a direct deduction on our S-Corp. We're going to have our business reimburse us. So again, it's an expense to our business, reimburse us personally for our use of our car. Okay, so let's move on to expensing like our cell phone. So we talked about the home office, we talked about the mileage. Now, I'm going to reiterate that we have to have this accountable plan with an S-Corp to expense these things. In the old days, when you did your Schedule C and you had a small business, you would just say, this is my percentage use of home office. This is how many miles I drove, and I would just get that expense on my Schedule C. But now with an S-Corp, we need this accountable plan, and the same goes for the cell phone use. So we used to just say, I have a cell phone, this is my expense. Now we all know that we use our cell phone for personal use, so it's probably not a real legit use of expensing your entire cell phone bill to your business, because there is a personal use piece to that. But if I was to get a basic cell phone plan, let's just say it would be $50. But in order to operate my business, I need a better plan. I need more data. I need to be able to stream. I need to be able to communicate via apps and stuff. So I have real business expenses associated with my cell phone. Now via that accountable plan, I can say, my basic plan is $50. Personally, I'm going to pay for that, no problem. But my business is going to reimburse me the additional $100 that I need in order to operate my business via higher services, higher data, faster, whatever the case might be. So every month, via my accountable plan, my business is going to expense $100 as a payment to me personally. Of course, this is a tax-free reimbursement. It's reimbursing me for personal expense. So we talked about the home office. It's the same thing. My business is going to reimburse me for a personal expense. Mileage, same thing. My business is going to reimburse me for a personal expense or something that I'm incurring personally. And we're going to do this with your cell phone as well. So our accountable plan is taking care of our home office, our mileage use, and our cell phone. So remember, the intent is to take all those expenses we're entitled to from our business, which lowers our taxable income, reimbursing us. Now, we don't have to claim that personally. I don't have to report that I'm getting reimbursed money. These are reimbursements, totally tax-free. So lowering my taxable profits from my business, reimbursing me tax-free from my personal accounts, that's maximizing the whole tax code. That's what we do for you. All right, so number 4, just like the phone bill, our business can reimburse us for things that we pay personally that we also use for our business. So say, for example, I go to Home Depot and I'm buying a bunch of supplies and I pick up a bunch of things, and rather than do a personal use and a business use card. I just purchase everything. I can have my business reimburse me for those things. And I've done this before with large grocery orders like Costco orders, where I might make a large order personally, but then my business is using these things for team meetings or customer gifts or whatnot. So keep in mind that accountable plan is about the business reimbursing you for things that you incur personally, whether it's a direct expense through like a personal credit card, or maybe it's an indirect expense like a home office. So our fifth example is business travel and meals. So say I go to New York and I want to go to New York and want to travel across the country for a conference, but while I'm there I want to enjoy the city. So I really have a business use, the conference, and actually a personal use, which is maybe going to see a Broadway show. So I travel to New York and I say, hey business, I incurred this expense. I paid for these meals, I paid for the conference ticket, I paid for the travel. You reimburse me for that business use of that trip, but then I'm going to still keep some expenses for my personal use. So keep in mind, if the IRS is scrutinizing us, they want to make sure that expenses that we incur actually have a business purpose, which I can absolutely show when I go to New York. But I also enjoyed the trip, and maybe I even took my family, I went and saw a show, I saw the Yankees, so those are personal use. So this is a great way through an accountable plan that we can expense our business and really have a good time, have some business purpose, illustrate that, document it, but still be able to have some really quality time with my family. So how do you actually get this accountable plan started? Well, reach out to me and my firm. We can help you do this. You need to keep documentation. This is a common theme you see in all my videos, is document, document, document. So we're going to document our accountable plan. Ideally, you do this at the first of the year and you maintain it through the year. We're going to illustrate what the business is going to pay me personally back for expenses that I incur. Now keep in mind, a lot of us struggle with this whole concept that my business is separate than me. If I'm a real estate agent, I think of me as I'm just a real estate agent. It's a part of my identity. But when we talk about taxes and an accountable plan, we're really separating the two. We're saying this is your business piece, this is your business hat, and this is your personal person. This is your personal piece. So we're making sure that we have that separation. So accountable plan is going to say Steve's business is going to pay Steve for the use of his home office $500 a month. And Steve's business is going to reimburse Steve $100 a month for his cell phone plan. And Steve's business is going to reimburse Steve for mileage that he incurs every month. Now, using mileage as an example, I definitely want to document that. So every month I would document that through an app or even on paper. I would turn it into my business, which is me. I would turn it in, and then my business would then write me a check for that business use. So it's all about documentation. We want to have a 60-day turnaround period for these reimbursements. So ideally, we're not going the whole year and saying, oh, the business owes me $5,000 through the accountable plan for my mileage. We really want to keep within a 30-day or a max 60-day reimbursement period. So if you're filing taxes at the end of the year and you remember that Disney trip in March where you went and went to a conference, but you also went to Disneyland, we really preferred not to go back that far. Think of a 60-day period, review your accountable plan regularly, ideally once a month, and you could do that with your tax advisor like me to make sure that you're on track. Okay, to summarize, you are an employee and an owner. Your employee self is W-2, and you could think of back in the day where you had to submit expense reports to an old employer to get reimbursed. We're doing the same thing here through that accountable plan. Your W-2 self is asking for reimbursement from your business owner self. And some of those reimbursements are static. $600 a month for my home office. Every month, the first of the month, my business is paying me personally $600 a month. Other things might not be as static. Travel, mileage might fluctuate greatly depending on your business, but just keep in mind these differences. And we want to document those. We should have a 3-ring binder that says accountable plan, that has the business have an agreement with you as the worker about what will be reimbursed, how, and the time frames. If you have all that supporting documentation, then this is a legal way to move money, funds from your business to your personal account without having to pay taxes. So remember, our goal is always to lower your tax liability, increase your profits, and keep more of your money in your pocket. And via an accountable plan, we could do this legally and stress-free.